The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney. It's wonderful as always to be here with you if you're watching us live or if you're catching up on the day via the podcast. Okay, let me, before we get really into it, just summarize what's been happening on market today. This is the COB Australia Index. The market has now closed down by 0.8%. So you see 11 o'clock, well, a bit of buying moving into that inflation read, and then down. So we had the S&P ASX 200 down by about 0.5% at 11:30, ticked down to about a percentage point into negative territory. Why? Well, kind of casts a pall over the market, doesn't it, when you think that there could be, maybe, I mean, people are talking about the potential for an August interest rate hike coming now that inflation beat expectations and even beat on the trimmed mean as well. So we just have kind of bounced along there until we find ourselves here. So down, as you can see, for the S&P or for the COB Australia Index, and we'll just wait for the last of the day's trades to go through the S&P ASX 200. But safe to say, a negative finish, even though we've seen, around the region, Japan's Nikkei closed up by 1.25%. Going our own way against some Asian markets at this stage. We've got the Hang Seng higher and the composite just trading flat right now. All right, so inflation, that's what we're talking about. Up to 4%. I'll be discussing with my guest, Mark Gardner from NPC Markets, what that means for us as investors shortly. A bit of a shake-up happening in terms of Seven West Media at the top, but I think another big one is lithium tumbling. Does it bring buying opportunities? It seems to be the obvious question. But for a little bit more color on the market today, if you haven't been watching every move like we have been here, let me take you through some of the sectors and why we're looking at them. So yeah, it's been a really rough week actually for these discretionary retailers. Yes, they picked themselves up yesterday, but there were steep losses in some of these names on Monday. And today we've got Wesfarmers down, JB Hi-Fi off by 3%, Harvey Norman as well. That's a big fall coming through for Harvey Norman. And then we've got Super Retail. That's off the back of a broker note coming from UBS, upgrading the company to a buy in the wake of yesterday's consumer data. They did put that note out before the inflation data today, I will note. There's Bapcor up by 0.7%, but you can see even market darlings like the Visa down by 1.3%, and Satire. What a crazy fall on Monday. Bit of buying yesterday, but being backed up today. Interest rate sensitive stocks not doing well, as you can see there. Goodman Group down by 2%. Center Group, guess the double whammy of property and retail, off by 3%. Let's get to the banks. So the banks also coming under pressure, with ANZ off by 1.5%, CBA down by 1% as well, and Macquarie off by about 0.25%. So really the only place that there was to hide in this market today was Woodside. Look, was pretty good. Some of those tech related companies in the teleco space, so Car Group, for example. And then we've got the tech space, so WiseTech. We've got Xero moving higher. Part of that is because we did see NVIDIA through the overnight period picking itself up off the mat. That pushed the S&P 500 and the NASDAQ higher. And yeah, lots of people saying, was it a buying opportunity? Was it a buying opportunity missed? I had a really great chat today with Tim Davies from Carrara Capital Management about NVIDIA. And he's been doing a lot of work into that company and whether the hunted will become the hunter. So the competitors are really coming up the back of NVIDIA in terms of the hardware. But he's forming a thesis that NVIDIA might actually really show its strength in the years to come when it comes to the software. Anyways, I'll leave you to find that on the website. You can do so by catching up with all of the amazing interviews that we did throughout the day today, ausbiz.com.au. All right, getting across some of the big corporate stories today. If there were many or any. Boss Energy says that it's found significant production potential at its Honeymoon uranium project at Gould's Dam. Star Entertainment, it's appointed Stephen McCann as Group CEO and Managing Director starting the 8th of July. He's from Crown Resorts, if it sounds familiar. And before that, he was Group CEO of Lendlease. And Seven West Media, it's appointed Craig Haskins as the new CFO. A new operating model will also put in place at the media company. 3 divisions, television, digital, and Western Australia. Okay, that's 7, so that says it all. The company also said that the number of redundancies and cost actions have been taken. Meantime, a bit of a change when it comes to the rate call, just to kick off the next conversation. For one, we've seen Phil O'Donoghue for Deutsche Bank. He's the chief economist here in Australia. He joins us often here on AusBiz. He has changed his interest rate call in the wake of that inflation data. He's now expecting a hike of 25 basis points, and I believe he's got August penciled in. RBA Assistant Governor Christopher Kent today said that the RBA can't rule out further tightening if necessary to tame inflation. That was pre-inflation read. And I think it's also worth mentioning that we've got another RBA Deputy Governor speaking tomorrow evening. And I was reading a CBA note earlier today, their assessment of that inflation data. And I did note that they put in their communique that, because we're going to be hearing from this other assistant governor who will have to speak in reaction to the inflation data today. It sounded to me like they might just be waiting before they sharpen their pencils too much on their current interest rate call, which is a cut for November, until we hear from that other RBA, that RBA assistant governor. Okay, so that's the day. Let's get a view from Mark Gardner from NPC Markets.
Good afternoon. Good
afternoon. Well, let me take a breath there.
Yes.
Get your thoughts on that inflation read and what it means to us as investors.
Yeah, look, it's still a monthly. I think the RBA will really just try and hold on and make no changes, realistically. Our view is nothing for the rest of the year, and then maybe if we do start to see slowing down, say February cut or Q1 next year, which is pushing out. We've all this year we've been late Q4 cut view, so we're just pushing that out a little bit more in light of just sticky inflation globally. Really, I mean, I think the RBA obviously jawboned at the last meeting, fairly hawkish as it was. So, and obviously, this inflation number today really is going to make, it certainly takes cuts off the table, but it's going to make it very difficult for them. But I think they don't want to make any hasty moves. I think as measured as they possibly can, given the turmoil of speaking too soon from the previous governor, etc. And look, making the mistakes that potentially Bank of Canada's cut rates at the start of this month, and then they've had double higher than expectation on a monthly basis
For inflation. That was
last night. So. And I did think it was a pretty bold call from Lagarde saying, inflation's going to be fine. So because the central bankers have been, I think it's been a little bit too populist lately. They need to learn to watch the data and probably shut up.
Yeah, well, I think that's to your point about, a hike potentially, because we do still have retail sales to come. We'll have the quarterly inflation read. But, with straight street tax cuts coming into effect on July 1st, obviously the RBA will be hoping that that's just money that will be either put toward mortgages or squirreled away, not finding its way into the economy. But there is also fiscal support coming. There's an election next year, and if you take Canada as an example, it's immigration, it's the US, it's immigration, and it's fiscal spending. So
look, inflation is being far more stubborn than central banks would have liked, and these things always take, I've said it a number of times, it's about 510 or 11 days or something average between cycles, which puts it in December this year. So the market's always, particularly these days, is just really impatient in getting ahead of itself overall. So I would expect it, just within the financial year at the moment, obviously, you spoke about the lithium before, there is very distinct, I would say, tax loss selling in those lithium stocks, the likes of Liontown.
Let's talk about lithium. Yeah, today was a shocker.
Yeah, the underlying lithium price hasn't fallen anywhere near as much as those stocks, and that part of the market's probably been the most under pressure all year. Obviously, Liontown up until November was trading around the $2.50, $2.70 mark. So
look at it there, 94 cents.
Yeah. So and traded in the mid to low 80s this morning. So I think lithium. Don't try to pay not a lot of attention to the GFEX futures, but they have rallied the last few days and I think this is probably a pretty good buying opportunity. I think once you see that tax selling dry up, it'll be thinner on the offer come July, the first week of July. Where I think the big risk in the market is at the moment is that consumer discretionary sector, even though it's been hit the last couple of days, and the banking sector in the big four banks particularly, you're not going to see end of year, take profit selling. I think you'll see that materials sector start to lift up, and then the financials and the consumer discretionary start to see some new financial year selling, because I think that there's reasons to be selling both of those sectors, and I think people are just trying to hang on for like 4 more days so they don't have to take that tax win. Yeah. So I think there'll be a readjustment because the commodity sector's been belted. It's had a stick taken to it in the last few, particularly lithium. So Liontown's, it's an imminent announcement with first production. There was a video released a couple of weeks ago. They're putting the final touches on that. So then a significant amount of project risk comes out of that stock, and I think you'll start to see institutional interest. So
did you add to Liontown today?
We've added to Liontown in the last week. We also bought some Fortescue for the first time in a long time.
Really?
Today as well. So the analysts are always super dour on 2 particular stocks that they're always way more bearish on than reality is CBA and Fortescue. At these prices, it's nearly a 10% fully franked dividend. Even the analyst consensus only sees the dividend dropping by just under 20%. So you're still getting 8% fully franked. And with Andrew Forrest at the helm, they always pay dividends because he's the biggest shareholder. So they have had a bit of board turnover. So we're only having a nibble at the moment. We're not going hard at it as yet. We've probably put on half of what we'd like to, but. I think this stock was at $29 not 5 weeks ago. Liontown was at $1.55, I think about 4 weeks ago. So there's been some really significant downside moves in some of these material stocks, and there should be some pretty decent bargain hunting, I would have thought. Even in different sector, in energy, Ampol has dropped significantly from $43 to $32. Is starting to offer some value. So there is some opportunities out there at the moment. But you just got to be pretty choosy and probably ignore the price action for this week, because it's just really savage, and it seems to be really thin, and we're all waiting for PCE at the end of the week, and we're waiting for inflation today. So I don't think you can pay too much attention. I mean, if you looked at the Liontown price this morning, you would have been freaking out, because it was, I think, at 84 cents, and then it's jumped back up this afternoon.
All right, so for this tax loss selling conversation, did you have any companies maybe in the small cap space, the beaten down space, that you've sort of had on a wish list that you've noticed that you have seen the impact of tax loss selling, which is making it more attractive or trigger happy?
Well, but yeah, obviously, particularly in that Liontown. We've had a couple that have strangely rallied. IPD Group's one of our small cap holdings. Mars Group's recovered a little bit. Karoon as well. So, and Woodside's finally stabilised, even though it's been up the last couple of days. If you sort of look at the broader chart, it's been our problem child for probably about the last 6 months. So,
lots of people talking about Woodside offering value, though.
Yeah. So thank God. But overall, it's been very erratic movement. I mean, yesterday, you could have got the heat map and just reversed the colours.
I know.
It's and the same as in the US last night as well. So I think you probably just need to just block out the noise a little bit and go and do your research and go value hunting where you can, because there will be some bargains around.
Got it. Well, why don't we leave it there then? Mark Gardner, NPC Markets. Thanks so much for joining us.
Cheers.
Always good. Now let's get to what we are expecting stock of the day. So UBS, as I mentioned, did upgrade Subaru Retail Group just this morning. I spoke with Ben Richards from Seneca Financial and Andrew Whiteland from DP Wealth Advisory. Let's hear what they had to say.
the retail companies running super hard in anticipation of rate cuts coming as late as this November, December this year, or I think the market had been hoping for February next year. I think we can say goodbye to that. So all these retailers are going to be under pressure. This is not a space that you want exposure to. If you're still holding it, it's trading near consensus, so it's probably a tentative hold, but it ain't a buy, Nadine.
Yeah, although shares have pulled back a bit from their high of about $16, we don't think it's super cheap, if you'll pardon the pun. It's on about 13.5 times forecast PE, 5% and a bit dividend yield, fully franked. So it looks okay on a valuation metrics basis, but it's just the earnings risk that we're concerned about. If you're desperate to own retail stocks, we probably prefer ARB in the space.
So look, neither of my guests on the call today were that positive on super retail, but UBS has actually put out a note upgrading the sectors, so saying that consumer spending growth will be led by middle and high income earners, that there's an improving outlook across discretionary spending categories, that its preferred exposure are for affluent and young old. So on that basis, it did upgrade super retail to a buy. But it, look, I can't go through it all. Safe to say, it's got a buy on Harvey Norman as well. But Harvey Norman today, as you may know, has been hit particularly hard in this discretionary retail sell-off. So, it does not necessarily guarantee a good share price performance even when you get an upgrade. Yeah, Harvey Norman is down by 7.6%. All right, let's take a look at some of these market leaders and laggards. Start with the good news, though. PolyNovo is up by 5.5%. I had a good chat with a gentleman from SG Hiscock today about biotechs. 2 biotechs he named that he'd like to own or that he would be buying. That's up online. But we digressed into the medtech space, and he said, of course, you'd like to own ProMedicus and companies like that. Anyways, take a listen. It's up online, as I said, ausbiz.com.au. Liontown Resources is up by 4%, as we just discussed with Mark Gardner from NPC Market. Strike Energy, I spoke with the CEO just yesterday. It is up by 3%. Bell Potter's lifted its price target 7% to 31 cents per share in the wake of its announcement on the Eragula power plan, and it has also seen its price target cut, though, to 36 cents per share by Euro's Hartley's. And we've got IGO and Nerve Pharmaceuticals on the list. As far as the laggards, and there were many today, Collins Food giving back some of the gains that it saw yesterday. Price target cut by Canaccord Genuity. Price target cut by Jarden. So that's taken a toll today. Harvey Norman, I mentioned, one of the worst performers, Eagers Automotive, and you've got Capricorn Metals and Genesis Minerals off the back of that as well. Small cap space, we've got quite the motley crew here. I spoke with Cyclopharm's CEO yesterday. It's up online. They're Technigas. They're going full throttle in the United States. Flipping the page, though, get to some of those losers in the small cap space. 3P Learning is on the list, down by 7.8%. So tonight, what's on the agenda? In Britain, we get CBI realized sales, and just checking my Reuters to see if we've got any of that data out there already. Not so in the United States. We've got new home sales out, and we also get U.S. crude oil inventories. Bit of news out of Germany. It's got consumer sentiment unexpectedly dipping in July, according to a survey there. What's happening here tomorrow? Well, we have May job vacancies report, which we'll be watching for much interest. We still do have a tight labor market, even though there are signs that it's loosening. Maybe we'll see another sign here. We've got a number of REITs going ex-dividend. We have retail sales in Japan and in New Zealand. We do have that consumer confidence read. Also not on the list, though, but we do have that Deputy Governor. Andrew Hauser is his name. He's speaking at a conference in Sydney tomorrow evening. I have so many of the FOMC characters, their names memorized, but we haven't heard a lot from these deputy governors up until, pretty recently, but they seem to be coming out of the woodwork, if I dare say, more and more. I wonder if that is a sign of what's going on at the RBA when it comes to communication. But anyways, no doubt Andrew Hazard tomorrow evening, 7:30 I think it starts, will be addressing, no doubt, the inflationary pulse here in Australia. Okay, let's take a final look at where the CBOE Australia Index closed, off by 0.8%. Let me flip over and give you a view on the S&P ASX 200. It closed down by 0.7% as well, so off the lows that were hit in the wake of that inflation read, 7,783. We underperformed markets around the region, and just looking ahead to E-minis in the United States, NASDAQ E-minis and S&P 500 E-minis are looking pretty good right now. All right, plenty of hope for the European and US sessions. We will see you when we're live from 9:45 tomorrow morning.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.